Hi everyone, Greg Towner here with Parallel Portfolios, and it's time for our latest 5 charts in 5 minutes. So let's get right into it. Well, of course, as you're probably aware, the market has recently had some volatility for the first time in a while. It's been a couple of years, it feels like, since we've gone straight up. Not truly the case, of course. We've had some corrections and volatility along the way in this run, but it always never feels good and always feels a little bit different because there's always headlines driving the negativity and all of that. Looks like the market is trying to find some footing now. Sentiment had gotten really negative. At some point, it only takes a little bit of positive news to push the market higher. So perhaps they're trying to find some footing here. But in the meantime, obviously the market has scared people a little bit to the negative side. But what's been different this time, and this is very interesting to us because I think you probably are aware that for years now, it feels like the S&P 500, this blue part here, has been leading the market. Well, this chart is just year-to-date returns is all, but so far the S&P is actually on the negative side by a fair amount. Small caps, this orange, or even worse, really poor. Perhaps most interesting is this pink, large growth stocks, what have been driving the market and driving the S&P 500, Magnificent Seven and so forth. They're actually among the worst performers in the market right now. So what is doing well? Value stocks have finally had a good run. Bonds are doing well. And what is this green way up here? Believe it or not, this is international markets, developed market stocks. Uh, International stocks have not done much for a long time, and now they're doing great. Again, short time period. Perhaps this won't stick, but we've been talking for a while now that there could be a rotation happening in the market away from some of the growth stocks, perhaps to some of the value. Not exclusively, there's going to be winners and losers in both, but we just think this shows the importance of diversification and keeping open-minded to different types of outcomes. All right, so what has been impacting the market? There's always a lot of different factors impacting stocks and bonds at any given time, but let's not kid ourselves. Right now, it's almost all about tariffs. So this chart is 5-year Google trend search, people searching words in Google for the word tariffs. Obviously, not much for several years there. And now recently, just skyrocketing, everybody wanting to know what's going on with tariffs, what are tariffs, all of that sort of thing. So clearly, this is what's driving the market. Like I said, other factors as well, but that's the big one. And so, what is it doing? It's negatively impacting consumer sentiment in a really big way. This is a long-term chart of vacation plans for people here in the US. Normally, it really drops during recessionary periods, these gray columns. We can see here it just recently dropped very quickly. And I can show you a lot of different charts on different metrics that shows consumer confidence is just completely falling apart as we speak. Like we talked about, sentiment sometimes can be really negative and it gets better quickly to the other side too. Well, where does that bring us? Obviously, the S&P 500 from a longer term perspective, going all the way back to 2009, has had an incredible uptrend. But you can see that along the way, there's all of these little pullbacks, sometimes not so little. There's 5%, 10%, 15, several 20s to 25s. We even had at the onset of COVID, the big 31 that didn't last long at all. But at the end of the day, what do you see? Up and to the right, the market keeps pushing higher eventually. Sometimes it takes some time. It never feels good in the moment. But eventually, for those with a longer term perspective, stocks move higher. All right, so where does that leave us in closing here? We're happy to see that other areas of the market and global assets are finally working. That shows the importance of diversification. So we would like to have some exposure to that. What is going to happen with tariffs? We don't know. No one knows for sure what's actually going to come through on the plans and how they'll ultimately impact global economies. But we have to admit there's increased risk because tariffs are usually a negative to economic growth. So has that been factored in enough? Is the pullback, already factored that in? Hard to say completely. I think if the worst case scenario comes in for tariffs, there's probably more downside risk, but it's hard to say that for sure. Keep in mind, corrections are the price that you pay for long-term compounding that happens in stocks. We want you to be in an asset allocation that allows you to stick in them for the long term so that you can enjoy those compounding benefits. Well, that's it for now. If you have any questions, as always, feel free to reach out to us. Thank you.